In this class, I'll be breaking down Fibonacci, a tool that can be used to help you identify important reaction areas within the market. The Fibonacci retracement tool incorporates horizontal lines that indicate possible support and resistance levels where price could reverse. Fibs work best when the market is trending and can help improve Forex trading performance for both short-term and long-term positions. Let's take a look at how we can apply Fibs to a live chart. All right, you guys, so today I'm going to be going over the Fibonacci retracement tool. And basically this tool helps you identify pullbacks within the market. And as you guys should recall, if you can identify the pullback, you can actually pinpoint a favorable price in the market for a re-entry. So let's go ahead and get started with this Fibonacci retracement tool. We are going to start by drawing the trend from the swing high to the swing low. So I do just want to specify, when you are measuring the fibs for a downtrend, you want to measure from the swing high to the swing low. Now it's going to be the opposite when you are drawing the trend for your fibs on an uptrend. You're going to draw your trend from the swing low to the swing high, and we will do both examples, all right? But first, we're actually going to go into all the little configurations of the Fibonacci levels. So I'm going to come right here to our settings tab, click that. I'm going to switch from coordinates to style. So first, we're going to start by extending our lines right, just so we can be able to have a clearer view of our support and resistance levels. Then we are going to change some of these coordinates in order for them to correspond with our take profit levels, okay? So first we're going to change this one to negative 0.236. And then this next one we are going to change to negative 0.382. And then the next one we're going to change to negative 0.5. And then the next one is going to be changed to negative 0.618. Then the next one is going to be negative 0.786. All right, you guys, so that is all we need to do here. I'm going to go ahead and press OK. And now if we take a look, we can see what price is currently doing. So something I do want to point out to you guys, all right, these levels right here, we did change them to colors for a reason. So price usually pulls back about 38.2% of the original move. So whenever you see price pull back into this area right here, you can anticipate a continuation of this move. You can even anticipate a continuation even in this dark green area. However, when price starts to get into this red area, you kind of want to be very weary of getting into any continuation positions, because if price continues past that point, it could actually indicate a complete trend reversal. So I do just want to go ahead and show you guys this tool in the past and how it worked, because it's kind of hard to see it right now because it's not actually doing the move. It's still in the midst of this pullback, you guys. So let's go to the past and let's do this previous swing high and swing low. All right, our swing high to our swing low. So as you guys can see, we had price trending down. Price then pulled up to this lime green area, touched our 0.382 line before starting its push down. Now we did create some take profit levels down here, you guys. And basically your take profit would also be the 0.382. If price pulled up to the 0.382, you would actually want to set your take profit at the opposite, negative 0.382. If price pulled up to the 0.5 and then started to make its way down, you would actually want to set your take profit at the negative 0.5. But you guys, it's up to you. You don't have to go that far of a distance. You could still have price come and touch the 0.5 or the 50% area up here and still set your take profit at the negative 0.382 or the negative 0.236. You know, either way, these are great take profits, you guys. Like if I measure this from the 0 to the negative 0.236, that is over 2,000 pips. All right, this is the 4-hour time frame. So of course you are going to gain some big pips on this move. Now, when it comes to your stop loss, you actually want to set your stop loss at either the next level or the second to next level above. It just depends on what you feel is necessary for the currency pair that you are trading. If you know that you're trading a very volatile pair, you might want to give the pair a little more room to do what it needs to do. All right, you guys, so before I move to an example of an uptrend, let's go over the rules for drawing your fibs for a downtrend. So first, you want to make sure when you're drawing your trend line for your fib that you are actually drawing it from your swing high to your swing low in the market, all right? Next, you want to actually wait for price to find and respect one of those resistance levels, one of those colored resistance levels that is indicated here, you guys. And then lastly, you want to wait for some kind of price action confirmation indicating a continuation before you actually enter, okay? So when you have price come up to these levels, you want to wait for price to actually confirm that it's really ready to move down. So that means if you are using regular Japanese candlesticks, looking for patterns like an engulfing candle before entering. You know, you want to wait for an engulfing candle at one of these levels before you enter in for this continuation down. Or if you are using Hakanashi candles, you know, waiting for a few flat top candles to come out, indicating some momentum moving down at these important retracement levels in the market. You guys can also use indicators like MACD and stuff like that, along with your support and resistance levels to act as a confirmation on when to enter your trades as well. But a golden rule, you guys, that you can also use is that if you are looking at a downtrend, you want to at least wait for price to break your previous low before entering into that trade, expecting the market to go down. So like you guys can see, this is the previous low, right? This was our swing high. This was our swing low. I personally would have wanted to wait. You guys see I have Hakanashi candles. So I would have wanted to wait to see a break and close below this support level before I got in for the rest of this move down. And with Japanese candlesticks, same thing. I would have been looking for some kind of price action pattern here at this support level, you know, maybe a retest indicating that price was ready to continue this move down. So let's go ahead and look at an uptrend example. All right, so you guys, we are still here on the 4-hour time frame for Bitcoin, but this time we are just looking at an uptrend example. So we're going to go ahead and get our Fibonacci retracement tool right here. And we are going to start by drawing our trend from this swing low up to this swing high. And then you guys can see, as expected, we did have price pull back to this 0.38 zone right here, you guys. So please make note that you can actually use these zones and set pending orders around them, okay? So once I drew my trend line, at that point, I could have actually set a pending order right here at this level, about 23.6% through the move. And you guys, when you set your take profits, your pending orders, you want to make sure that you are using these numbers over here to the far right. And an easy way to do that, you guys, is to just come here and grab your horizontal line tool and just place it right above the areas you want to set your orders around, whether that's your take profit, whether that's your entry point, for your pending order, whatever. All right. So it will actually give you your price point right over here. But I'm just going to go ahead and remove that, you guys. And as you guys can see, we did have price pull back to this zone before it actually pushed up. And since this was our previous high, I would have waited for price to at least break this area, which it did. But then we had a pullback just a little bit lower than our entry before price actually went ahead and pushed all the way up past our 0.382% area up here. So a lot of the times you guys can set these points as like take profit 1, take profit 2, take profit 3. If you can find good entries. Like, look, you guys, we had price pull back to this area multiple times, to this green area. You could have gotten in quite a few times if you were very confident that this market was going to continue to push up. So if you would have set a different take profit for every single entry, then you would have secured even more profits, because as price pushes up, even if you start to recognize at some point that price is turning around, you are able to still close all your positions with profit. So, all right, you guys, let's go ahead and go into the confirmations for Fibonacci in a uptrend. So first, you're going to make sure you draw your fibs from your swing low to your swing high. Then you want to wait for price to find and respect a support level in the market. And then lastly, you want to make sure you wait for some kind of price action or indicator confirmation that price is going to continue up. I also just want to remind you guys that when you are setting your take profits, you want to just set them at the correlating opposite level. So again, if you saw price pull back to the 0.382 area before it continued up, you will definitely want to set your original take profit in the negative 0.382 area. So I hope you guys did find this tutorial on the Fibonacci tool to be useful. Please keep in mind, you guys, that no indicator, no tool is going to be 100% accurate all the time, but most major moves will pull back around these Fibonacci levels, you guys. So definitely practice this tool, see how it works on different pairs. Maybe on Bitcoin, it's very common for price to pull back to the 0.382 before it continues in its trend. But maybe on another pair, it's common for price to pull back to the 0.5 before it continues in that trend. A lot of the times you can create some configurations of your own that gives you some kind of profitable edge on the market yourself. So never be afraid to play around with these tools, because they are definitely helpful. But that is all I have for you guys. I hope this training helped. You guys already know the deal. If you have any questions, just reach out via the discussion board and I will definitely get back to you. But other than that, you guys, I'm out. That concludes this lesson. If you have any questions or remarks, please join my discussion board and make them known. Feel free to follow me on social media and leave this emoji under a recent post for a follow back. Thanks again for tuning in to Money with Mari, and I'll see you on the next episode of Forex 101.